What's up, everybody? Good morning. It is Tuesday morning, May 16th, day 4 of the 10k to max funding account challenge. Man, still feeling a little sleepy. Woke up a little later than I normally do today, but we're here. We're going to be here every day, Monday through Friday, 7 a.m. Eastern Standard Time. And we'll look at the charts and see if we can find any trading opportunities live. If we can't, then you can follow along on Twitter for the rest of the day at Venator Trading. And I'll post any trades with screenshots, entries, exits, stop losses, profit targets, and keep everyone updated throughout the day there. So, but here we are, day 4. And we've got nothing cooking right now. Yesterday, I don't typically trade on Mondays, didn't take any positions. Wanted to see how the market was going to respond after the large down range, big range candles from Thursday and Friday. We had a little pullback. I was expecting price to run up a little bit above higher on euro and pound. It has. I gave that analysis yesterday, and we'll look at that here in just a minute. US30 is just bouncing around, consolidating in the range from Friday, having not going higher or lower than that. And so I'm not really looking at US30 now until I see some kind of break from Friday's range. We'll see. Today we have some news at 8:30. So we'll see if that brings in some volatility and some movement into the market, and maybe we can capitalize. But we've got an hour and a half before then, and so we're just going to tape read. We're going to look at the markets. We're going to look at the dollar, the pound, the euro. We may look at some other stuff, but those are the ones I focus on mostly. So yeah, if you're new, you're joining us. A little bit about the challenge. We are trying to take a $10,000 account. We're using Bespoke funding, new prop firm. They offer the largest max allocation that I can see so far of any prop firm of $2 million. Now, they are a new firm. And so, so far they've been posting payouts, and traders seem to be very happy. They've got great conditions. Their spreads are fantastic. You get better spreads, but you do pay commission, which is fine. You're going to pay on one side or the other, and I'd rather have tighter spreads, quite honestly. Make up my money on the profit side, the profit targets. So, 10K account challenge. Their daily loss limit is 5%. Their profit target is 8%. We are currently down just above 2% at $9,820.19. We've only taken 2 trades in 4 days. We are only taking A+ setups. They have no time limit on this challenge, on any of their challenges. So there's no rush to get in and try to get this thing knocked out as quick as possible. The goal for every professional trader is to hunt high probability setups. And so that's what we're trying to do. We're only going to take the A+ setups. My trading style is order blocks and breaker blocks, imbalances, fair value gaps, liquidity runs, stop hunts, those kinds of things. So we're looking for price to reach into liquidity, manipulate the market, and then try to find the distribution as it moves away from that liquidity. So that's what we're doing. That's what we look for. I know my watch list over here has all this stuff on here. I really only watch these 3, US30, the euro dollar, and the pound dollar. I use the dollar index here as the barometer for how these are going to move, whether they're moving together, whether we get SMT between the dollar and euro. So as I anticipate dollar strength or weakness, that helps me anticipate euro and pound strength or weakness. And also how the indices are moving. Are they moving in line with the dollar? We don't want to see that. That's typically choppy market conditions. But when the dollar is strong, the indices should be weaker. And when the dollar is weak, the indices should be stronger. So we just use those in correlation with everything. So welcome in. If you are watching this, which currently no one is, and that's okay. I'm really doing this more for myself, and as it grows and I get funded and I keep growing this towards max allocation, I'm expecting more people to want to tune in and watch. You got to show receipts. You got to be able to show receipts. I make no claims whatsoever to be a professional trader. I'm trying to be a professional trader. Until you have quit your day job and you are solely making all of your living income from trading. And I mean trading, not from a course, not from mentorships, not from a private community, actual trading. You're not a professional trader. Now, you can be a full-time coach, you can be a full-time mentor, you can be a full-time educator, and there are plenty of those, but most of them are not full-time traders. I would love to be both. Right now, I'm not either. And I'm really doing this for my own accountability and to show other beginners out there that this is doable and you can do this. And if you're not trying to do this, then you're not taking advantage of the gold rush of prop firm eras right now that we live in. We live in the gold rush of prop firms. There are so many, there's so much capital available. They're all super competitive and they're trying to outdo each other, which is only going to be better conditions and trading environments for the traders. So that's what we're doing. We're trying to take the smallest amount of money possible. Well, it's not the smallest amount. There are smaller account sizes out there. The 10K is an easy round number. Most of the prop firms with 10K accounts are charging at about $100 per account. So that's a reasonable investment for any trader. Let's say people are about to fund account with $1,000. Then you have 10 bullets in your gun to shoot on a 10K account. You could buy 10 10K accounts. And I promise you, if you have strong risk management skills, you have a profitable strategy that has at least a 50% win rate with a 1-to-2 risk reward ratio, you can do this. You can pass a 10K. You can use those profits to buy larger accounts and then use those profits to keep buying accounts, max out allocation, $2 million allocation. 3% in a payout period in 2 weeks time, 3% is 60 grand on a $2 million account. And you get to keep 80% of that. So $48,000 in a payout. They pay out every 2 weeks. 3% in 2 weeks is extremely doable. Is it? We're not going to get there fast. My goal, honestly, my big, hairy, audacious goal is to get max funding by the end of this year, 2023. We're in the middle of May right now, so we've got 6.5 months to try to do this. And it's going to be kind of one of those things where it's slow at first, but then as you can get into those larger accounts, it can go faster. It's like the, hey, would you rather have $1 million now or a penny doubled every single day for 30 days? And most people are like, oh yeah, give me the $1 million. And So you start adding 1 penny. The next day you get 2 pennies. The next day you get 4 pennies. The next day you get 8 pennies. And you're like, man, this is taking forever. It's slow at the beginning, but by the end of the month, it's going like from 400,000 to 800,000 to 1.6 million to 2.2 million. And so it's going to be kind of one of those things as we come down towards the end of the year. We're going to be buying 400K accounts, hopefully, and maybe multiple 400K accounts, depending on your profit splits and what we can do with those funded accounts. So that's the goal, is to get max allocation starting with a 10K challenge. And so we're at day 4 of the challenge. We are down 2%. I'm allowed on my own personal trading rules for this challenge to only lose 2% max daily loss. Now I can take that 2% and break it up over multiple positions. I can put it all on one position, which is what I tend to do because I'm only trying to take high probability setups. So I've taken 2 trades. Both of them had risk 2%. Lost the first one. The second one was stopped out at break even. My rules tell me that I move to break even when price moves in my direction 1.5 R. So once it reaches 1.5 R, I move to break even plus into profit a little bit to cover commissions and spreads and such, so that it feels more like a true break even. And I don't just lose commissions on top of that. That can eat away at your account when you start getting into larger account sizes. It can really add up. So move it into profit just a little bit. But tap me out, and then of course it did drop to our anticipated profit target. It's fine. I don't really care. I know what my win rate is. I know what my risk reward is. I know how my system plays out, and it works. And so it's just a matter of time until we get this first challenge knocked out. So we have to get to 8%. I'm hopeful we can find a couple of trade setups this week and move this thing back into profit. And depending on what the market gives us, we might be able to find three winning trades right now. If I won 3 in a row, this thing would be passed, and we would be on to phase 2 and on our way. All right, so we're gonna go up to the 4-hour time frame and just kind of look and see what happened yesterday, which was a whole big fat nothing. This is the dollar index, and we're just consolidating and winding up super tight. So this is a 4-hour time frame. This is just nothing there. There's just nothing to trade in there. We're still in this range from last week, and we're just caught. Last week was an inside week, and now we're inside the inside week. So what am I anticipating? What's my overall direction on the dollar? I mean, you have some obvious buy side liquidity resting above here. We've already tapped into sell side liquidity here. We've had a break of structure with displacement here. And, you know, we didn't reach up into this buy side liquidity. We've come back down. We've reached into some of these fair value gaps. But we failed to get displacement higher. So, you know, if the dollar can continue its rally from last week, then I would anticipate these indices would want to come back down and attack some of these lows from the middle of March down here. Seasonally, we're kind of entering that season where indices typically are lower. There's plenty of data to go back and show you year over year the market cycles throughout the year. And the spring into the summer is typically the time, and there's no set point on when that starts. Maybe we're in it, maybe we're not. But you can on most years. Of course, it's not guaranteed, but a lot of years you can anticipate bearish price action on the indexes. And so, you know, if the dollar again can continue to strengthen from last week's rally, then I would expect and anticipate US30 and NAS and S&P to be lower. But we'll have to wait and see. We don't have a lot of confirmation right now on anything that's happening on the daily. It's just a whole lot of 1, 2, 3 inside bars, 3 inside days. There's nothing happening. And to try to tell you where it's going to go, no one can tell you that. Some news flashes. Let's look at the headlines for US30. I do not trade the news, but I think it's entertaining to kind of see what happens, because every day they can say one thing and the very next day they can say the exact opposite things. U.S. equity futures. This is MT Newswire's mixed pre-bell ahead of retail sales. That's the red folder news coming up. Industrial production data and Fed leadership speeches. So basically they're saying the market's just hanging around trying to figure out what thing is going to push it over the edge and start getting some movement. Futures flat ahead of debt ceiling talks and data. So the debt ceiling's coming up at the end of the month. Janet Yellen, Secretary of Treasury, has said if we default, it's going to be bad. I tend to believe that, and whether it was her who said it, I mean, anybody with a brain can understand that if the superpower of the world and the leading economy of the world defaults on its debts and its obligations, probably not going to be a good thing for the economy. So, you know, both sides, and I'm not getting into what side's right and what side's wrong. That's not for this channel. Both sides are pointing the finger at each other and blaming the other for a anticipated default. And we, the people, are the ones that will suffer the consequences no matter what happens, good or bad. And those idiots, both sides, are just all about power. Everything they do is to paint themselves in a light for people to keep them in power or to get more power. And that's politics, sadly. But that's where we live. Futures flat, shares edge up, and nervy trade ahead of debt limit talks. Debt limit, it's all the rage right now. So we don't know what's going to happen with all of that. Until then, US30 just isn't anything really worth trading. Was super excited about that trade we had and called here last week. Had a break of structure with fair value gap. We came back up inside of it. I called this trade right here that would end up coming down and take out the previous day's lows, which it did beautifully. That was a fantastic trade, and I wish I had capitalized actually on top of that more than I did. But I did capitalize on it. And now we're just back inside. We couldn't take out that high from that range. We haven't been able to take out that low. And we're just bouncing around, waiting for some good news or some bad news. Do something. Let's look at the pound. Here is our analysis from yesterday. This I drew out way back here. I said, here's what I'm anticipating for the pound today. This is a 4-hour order block that we had identified from Friday. And we had said, hey, we don't really want to see a close above that. If price is going to remain bearish, it's going to respect the bearish order flow here. This 4-hour order block is what we were looking for price to respect. However, because it had relative equal lows, and because we also think that if it wants to remain bearish, it would take out liquidity here, because this is the Friday high. which means anybody that was short after price ran these stops and dipped into the weekly imbalance above here, as price made this aggressive run down towards these relative equal lows, which it left in place. Hint, hint. People are going to be moving and protecting their stops and locking in profits. And so this right here is where, from last Friday, you would anticipate people to have a lot of their stops in place. So, yeah, I'm anticipating price, and it already has done so, to run above and take out these stops, which it's just done recently, reach deeper up into here. I do have a sell limit on another challenge account, a $100,000 challenge account. That's why you see this short tool here from the indicator from TradingView here that I have popped up on the screen. I'm anticipating price to reach up into here before it wants to reverse. Maybe fill in this, reach up, maybe close to this order block. My stop is above the body of that order block right there. So we shall see. It's left all of this liquidity down here. Does it have to come down here? Absolutely not. You can see they had news on the pound this morning that shot down, and just very quickly you can see how price reacted to the news. News here, boom, and then a quick rechase, which cleared out all the liquidity on this lower time frame to make a run higher, up above these relative equal highs, into this fair value gap. And I'm specifically targeting this level right here because you can see this candle right here has no wick. Right there. So you have a big imbalance, a no wick candle. I would like to see price run the liquidity above here, tap into that, and then start coming back down. So this could be just a stop run to induce buyers to get into the market, only to run liquidity on this side and then squeeze all these short buyers out as it comes back down. Ultimately to grab liquidity here and the relative equal low liquidity under there. So that's kind of what I'm anticipating. I might participate on the 10K challenge account if it reveals itself. It's already reached up above this 4-hour order block. And if we, and then see in the next 4-hour candle closes in an hour and a half. And again, my preference is that it doesn't, we don't get a body close above this 4-hour order block. We can, it's fine. My preference is that it wicks up and then runs back down, but don't know if it's going to do that. We're just going to watch and anticipate and try to participate. Most of my entries are on the 15-minute time frame. I'm going to take off these little arrows and get rid of the analysis there from yesterday and start fresh. So you've had this big news. We've got more red folder news here. So maybe the red folder news sends this shooting up and we get some pound strength and fake out buyers, only to send this lower as the dollar strengthens throughout the rest of the day. So that's kind of what I'm anticipating here, is over the next hour, price to probably just sit around inside this range right here, and then with news at 8:30 maybe we get this and then we get this, something like that throughout the rest of the day. So that's what I'm anticipating on the pound dollar as we head into the news in an hour. We'll see how it plays out. I mean, putting it out there, could be wrong. Very well likely could be. And I don't care if I am. And that's how traders have to anticipate and actually trade. Let's look at the euro. Euro, very similar, has reached up above this high where people may have trailed their stops from Friday and even yesterday's high, they see price coming back. Ooh, let's lock in a little bit more profit. These are old fair value gaps on, I think it's a 4-hour time frame over here. Yeah, these would be 4-hour time frame fair value gaps right here. And so we'll see how price reacts to those. You have a again, the imbalance right here. Price is wicked up into it. It's taken out these relative equal highs and it started to pull back. With the news, maybe you get another wick up, accumulate some more positions to send it lower. This is the, well, Friday's low, and then this low back from April would be what your initial short side bias would be. You're overall in a market maker sell model right here. So the market has run up. It's topped out. We've had a break of structure. We have a fair value gap return. I believe ICT calls this a silver bullet entry, where you get in on the second leg down off of a fair value gap. So you've got this. This is right where we've tapped into. So really on a market maker sell model, you're really looking for price to run the low from where that started, which is down here. So, I mean, I don't know how it would take a while to get there. That's from March 15th. And we're in the middle of May. So a month and a half of time to get from there to back here. So this is probably a couple weeks more time to get back down here if we're going to go there. It's going to take a while. But initially, we're just targeting this low and this low for liquidity. Price has retraced the big move down from Thursday and Friday. It's respected so far this order block. We haven't gotten all the way back up to that 4-hour order block on the euro dollar. It doesn't have to. It has filled in this fair value gap right there and respected it. And this old fair value gap could become an inverted fair value gap and act as resistance. So if the bodies stay closed inside of there, we would anticipate this now to become, we've traded through it, we traded back to it, respected it, we've traded back to it, popped above it, but the bodies are closing inside of it. So this could be the turning point for euro today. Maybe this is the high of the week, or with news, maybe we get another pop up and get the high of the week, and then we roll over bearish for the remainder of this week and capture a couple big moves down again. So we'll just wait and see for the news. No positions until that news comes out in just over an hour. But again, same anticipation, similar to the pound. Euro has popped up and taken out where protected stops would be from Friday's move down if people were locking in profits and trailing their stops down. There's liquidity right there. So let's grab that. But we could come up a little bit higher. Maybe up into here. I would not think it wants to come back up here. Grabbed it here, came back up, retraced, fell away. You can see it's just making lower highs. And so Monday's price action, retraced. We've taken out Monday's high. If New York takes out the London high and then falls, or maybe it leaves the London high in place with the news, hard to say. But this could be the high of the week. And pound, I think the high of the week is still to be made after the news comes out, which means euro could as well. But I'm anticipating it today or tomorrow to put in the high of the week. And again, US30, really no interest here unless we get a big Judas swing up with news to take out some liquidity here. Not really interested in getting involved with that. I would need to see some clear, again, pop up, grab some liquidity, quick displacement back down, and then I might look to get in, but probably not. I'm going to stay focused on the GBP and the Euro, and we'll just watch and wait. So that's kind of what we're anticipating, and that's what we're doing. All right, I'm going to open this window over here, get a little morning light coming in. I don't know if this, does that change? It doesn't really change my lighting, does it? All right. So, that's what we're looking for. All we're going to do is sit around and wait, because I can talk about that for a minute. This is what trading looks like. Waiting. The reason I named this Venator trading is because Venator is Latin for hunter. And what I have learned in my experience on my journey to become a full-time day trader is that you spend most of your time sitting on your hands and not taking a trade. New traders want to come to the market and they just think, I'm going to click buy or sell. And you can make money just by walking up and clicking buy or sell. And it's very bad if you do, because it's going to just ingrain in you that you just have the touch, or you just know, or it doesn't matter. Like, no stop loss, it's gonna go up, it's gonna come down. So it's just a horrible way. Like, you need to have a plan when you come to the markets, and you need to know what your A+ setup looks like. Hunters, when they go out into the field to hunt and they're looking for their big trophy game, whatever it is they're trying to take down, they walk out with their gun, and they probably only have a couple of rounds with them to shoot. They don't take 100 rounds of ammunition with them. Some are single shot rifles. Some might have a 5-round capacity, whatever. But I say that to tell you, you should have the mindset of a hunter when you come to the markets every single day. You should be walking in quietly. You should not be trying to bull rush into the day. You should come and sit down and open the chart quietly with a prepared, quiet mind, with no anticipation of what you're going to see. When you walk into the woods, you don't know what you're going to see. You know where you have previously gone out and you have stalked your prey, and you know where they like to eat, where they like to drink, where they like to sleep, and where they like to roam about. And you know that given the right conditions, that trophy game is going to cross a certain path at a certain time, and you are going to be sitting in a blind or a tree stand waiting patiently and quietly. You don't know when it's going to show up, but you know that when it does, you're going to be ready to execute and take it down. The exact same way that you need to approach the markets. The exact same way you need to approach the markets. You need to come quietly, sit patiently, twiddle your thumbs, and wait for your A+ setup to appear. Why would you put your capital at risk on anything less than the highest probability setup that you can identify? You're just going to ingrain bad habits, and you're going to start being willing to take lesser setups when they appear. And that's just not a professional trader. That's not what professional traders do. Professional traders are willing to put their capital at risk in the right situation, on the right setup, the right time of day. So be a hunter. Stalk the setup and wait for your opportunity. And when it's there, put your 2% on and trust your edge and trust your system, trust your data and your numbers that show you 50% of the time you're going to win 1 to 2 risk reward ratio. If you can flip a coin and every time you flip heads, you win $200, and every time you land a tails, you lose $100. How many times, if you could flip it as many times as you want, how many times would you want to flip that coin? Freaking infinite. Like, you would be like, just give me the coin. I'm just going to flip it nonstop. Because you know you're going to double your wins over your losses. And 50% of the time, you're going to win. So, man, you would flip until your thumb couldn't flip anymore. And then you'd go to the other hand and keep flipping. It's the same with your edge. If you have a 50% win rate, every trade has a random outcome. You don't know what it's going to be. But if your data from backtesting, forward testing, shows you A+ setups have a 50% win rate, you're going to be golden. You don't need to worry. All right, let's look at some other charts. See what's going on in other instruments over here. Let's check out gold. Gold on the daily time frame has taken out these relative equal highs from a weekly time frame that were sitting up here. So this is from August 2020. This is from 2022. And now in 2023, we've reached up above both of those highs, grabbed liquidity, and started falling away. We have some relative equal lows down here that would represent sell side liquidity on the weekly time frame, and then again all of these lows under here, there would be more sell side liquidity. Daily time frame, inside bar yesterday off of Friday. So we have not taken out Friday's high or Friday's low. So I would be watching to see how price reacts after taking either the low or the high of Friday. We had a slight retracement up there, but we couldn't get back above Friday's high yesterday. And now today, mostly lower. If you go down to the 4-hour time frame, you can see the sell side liquidity here. You've got sell side liquidity here. You've got buy side liquidity up here. This is Friday's high that it couldn't take out yesterday. So potentially you could see maybe news gets you a run up into this order block that sends it lower, or a dip. Alternatively, the opposite side could be we're going to run this sell side to come back up higher. If the dollar is going to be strong, which I'm anticipating some short-term dollar strength here over the next couple of weeks. As people aren't quite sure what's going to happen, they're going to move out of the markets and into the safe haven of the dollar. Not that the dollar is super safe right now, but that's how people think. Until we get this debt ceiling situation figured out, people may be moving to the sidelines, and they would put their money into the dollar. There's a lot of high interest money market accounts out there, which is also contributing to the banking crisis, because banks are offering 0.15% on savings accounts, and money markets are offering like 4.5%. So yeah, why wouldn't you pull your money out of a bank and put it somewhere else? And so capitalize on the strength of the dollar. So short term, news may get some movement up into here. Maybe it grabs that liquidity, maybe it doesn't. But that's buy side liquidity. So if the dollar is going to be strong when the news comes out, you could potentially see it pop up. Judas swing and then make a run for this sell side liquidity and ultimately all the stops that are resting below all of these lows from back here. So that's what you can be looking for on a gold trade potentially. I don't really take a lot of gold trades. I have in the past, but try to just focus on the pound dollar, the euro dollar, and US30. So you do have a nice little break of structure here. You still have the sell side liquidity targets down here that it may be trying to run for. If the dollar is going to be strong, maybe you get a run up into these fair value gaps, maybe back up into this order block area here, and then we run these lows down here. But just so you can see what I'm talking about. News comes out, we run up to here. Only to send price lower into here, and then maybe a retest. And then you make a run for some lows down here over the next couple days. Or today, I don't know. I mean, I guess it could run that far, but it's going to probably reach for Friday's low at the bare minimum, I would think. I don't think Friday's low is safe. NAS on the daily. Oh, sorry. Let's go to the daily chart here on NAS. We've made higher highs now on the NAS. And if you look at S&P, we haven't made higher highs yet. And the US30 has not made higher highs. So NAS, maybe this is the SMT for seasonality, where NAS has made higher highs, US30 and S&P have not. So maybe we get our rollover now on NAS, and US30 and S&P drag this thing lower. You have some buy side liquidity up here. You've run into this daily order block currently right here. This daily order block is, we've reached into it now. And I'm going to make this my order block color. Like the orange. So we're reaching up into that daily order block right there. You do have buy side liquidity resting up here. Got your buy side liquidity right there. 1, 2, that's a higher high, and 3. So you've had 3 stabs up into above these highs here. And again, S&P and US30 have not. Or my dog walking around back there. So we'll see. Is NAS going to roll over? Is S&P has yet to take out that high that NAS has. And NAS has held that high too. It hasn't just reached up in it. It's stayed above it and respected it. S&P has yet to make that high. We do have some little trend line liquidity here. We just have inside days. We're just kind of pinching down into this tight little zone, and we need some news. Since the beginning of April, we've just been moving sideways. Had a little bit of expansion, but now we're back just moving sideways. So it's kind of a disgusting market. There's really nothing to see. Just in range, and right now we're kind of in the middle of it. It's just real ugly. And you see the same thing on US30. We're kind of at the bottom of the range, but we're still in this range. We are holding the lower end of that range currently. We haven't moved way back up into it. Yesterday we tried, and so far today, again, we haven't taken out Friday's higher low. Until we do, not really interested. Haven't taken out Friday's higher low on the S&P. We did take out Friday's high this morning on the NAS, So maybe that's the turning point we've been looking for. Took out Friday's high right there. Monday we couldn't do it, but we did just reach up over it overnight at 3 o'clock in the morning. London reached up there and grabbed Friday's high. So this is the hourly time frame. You know, you've got this trend line, that retail. This is just liquidity. Like, there's just stops under all this. You would think we're going to want to grab that. Maybe targeting this imbalance right here. If you get a very strong breaker of structure on this hourly time frame, this would be a great breaker block, because you've went down, ran last week's Friday's high and Monday's high. And if you get displacement down here and you get a fair value gap, then I would be looking for a retest of this area to then move lower somewhere up in there. That would be a beautiful little breaker right there. All of these candles would be considered the breaker. So I guess that's like Asian session. London grabs it, New York gets displacement, we come back somewhere around there, and then we drop lower on the NAS. We'll have to watch and wait and see what the news does. We've got about 45 minutes till news comes out. Let's look at USD CAD on the daily. Okay, we're in a range. We had strong move down, and then last week strong move back up when the dollar rallied on Thursday and Friday. We did drop down below Friday's low. We've moved back into this buy side imbalance right here, this fair value gap. We've reached down into it yesterday. We've reached down into it again today. You can see overall, like, we're just in this big from 38.5 to 32.2, this 300 pip range. We're just, dollar CAD is just doing this. We're near the lower 75% of the lower side of this, or 20, if you were going to break this up into 25%, halfway, 75% top, right? So we're just under 50% of that currently holding it. If the dollar is going to be strong, you might get a dip down, which we've already got, and now we're retracing. So on the 1 hour, let's look and see what's happening. Okay. Buy side imbalance, no wick on this hourly candle. So maybe news drops down, grabs that no wick candle here, and then we run higher. Doesn't have to. We've already grabbed liquidity again from Friday and from Monday. Grab liquidity Friday, we grab liquidity Monday. And if we get news and this thing just bull rushes up and we get a break of structure and a fair value gap, this would be your breaker that you would be looking for potential entry on. A break, come back, grab that, and then start running for those highs again. We have had a break of structure here. Fair value gaps, reach back up into it. A break of structure, but we've already moved back up into it. So if it's going to be bullish, we want to see price invalidate, disrespect, violate this bullish candle, close above it. That would then become a breaker, and we could look for an entry of that bullish candle with an entry somewhere around here and your stop somewhere down here, and you would be targeting these highs. Dollar yen, just moving on down the list. Don't trade these, but I can paper trade, and I can immediately tell you we're in consolidation. We've got buy side liquidity resting up here. You've got sell side liquidity short term here. This whole trend line that you see building up, that's all liquidity right here. If the dollar is going to be bullish, Maybe you get a drop back down into this order block, and then you run these buy side liquidity here. You do have red folder news today on the yen. Later this afternoon. It's actually this evening, so it's tomorrow officially. On the trading clock, it's tomorrow, but it's in this 24-hour period, so it's today on the 16th. You got GDP, so that's going to bring some movement to the yen pairs. Pound yen on the daily, we're just kind of in a little sideways movement here. We had a big run up at the end of April, and then May we've pulled back into this SIBI or BISI here, this buy side imbalance. We've reached back down into this daily order block, and we've respected it, and we're coming back up. But until this range gets broken, we're just kind of moving sideways. And again, maybe news today on the pound and the yen, all of that could potentially provide all that. Bitcoin. Bitcoin. We ran this high on the daily time frame aggressively. We came back down into the range. We tried to run that make a new high, and we failed. We have sell side liquidity resting under here. Failed to make another high, and then we've just now dipped into this sell side liquidity, ran into this buy side imbalance, and currently trying to get back up and get back inside this range and make a run for 30K again. We've had a break of structure. We've had an imbalance. We've had another break of structure. No imbalance, but it has traded back up into this order block and respected it. So until this daily order block gets violated, we're looking to the downside. And where would I be looking? I'd be looking to take out Friday's low here. Nope. Friday. Oh yeah, because it trades over the weekend. It's 24 hours. Forgot. So this is Friday's low here. That's Saturday, Sunday, Monday, Tuesday. So we've traded back up into this run down from Thursday and Friday, and now rebalanced priced. We could be looking at lower prices back into 25,800, and then this order block, daily order block here, we would need to see violated if we're going to see continued prices lower. So this is your daily order block that you don't want to see get violated if you're bullish. If you're bearish, you want to see it crush that. But you can imagine price is gonna, I mean, it could just blow right through it. But I imagine price is gonna create a new lower low, get into this order block, come back up, get into a lower time frame order block here, maybe use this imbalance as an inverted fair value gap if it gets violated, and push that lower. And then you've got all these imbalances down here that it could try to dig into. So yeah, if it gets past that daily order block there, you're looking at, 22,000, 21,600, somewhere in there. It definitely is it aggressively ran up and then aggressively ran back down. It could not hold that high, and it has failed to make new highs ever since, and now it's just dropping off. So yeah, now looking probably more bearish, but again, what do I know? Don't trade crypto. All right, here we go on the pound. Let's get back over here to where what we were anticipating. We are having a break of structure now here on the 15-minute time frame on the pound. We ran stops above these relative equal highs. We're respecting this 4-hour order block, which closes in 1 hour. You can see, again, this is the 4-hour order block. It's respecting it. It dipped above it, took out some stops, and maybe that's all it needs. maybe it's not gonna pop here, but we are getting a break of structure on that time frame. We ran liquidity with news, and now we've ran liquidity to the buy side. So we've taken liquidity on both sides, and now is this the real move back down to these relative equal lows? Potentially, could be. We're gonna watch and wait. I'm not gonna really do anything until after the news. I want to see what happens in 30 minutes, about 35 minutes when we get this news. This could just be accumulating orders so that it could make another push above into these imbalances over here from Thursday and Friday. Alternatively, it could just we could be getting our break of structure, and over the next 2 15-minute candles, we get these imbalances, news comes back up, hits into this 15-minute breaker, and we run lower. So this would be a 15-minute breaker block here. This is your last down candle before you had an up move to clear buy side liquidity that then aggressively moves and displaces below that candle, typically leaving a fair value gap. You would be targeting a fair value gap here in line with this breaker candle, this breaker block. You could put your entry somewhere right in there. Your stop could be above the breaker, would be super aggressive. I usually use the candle at the highest fair value gap. That's my stop. So that would be like a 16 pip stop. And then I would be targeting these lows. That would be your 1 to 2 trade for the day. All right, so we're getting some movement there. Dollar is running higher off of this is just crazy how much this zone has been respected on the dollar. This fair value gap on from way back, it has just been quite the turning point for dollar. You can see this red line was the buy side liquidity we were targeting last week from an old high. Ran it, we've come back down into it. This could be your weekly low on the dollar right here. We may have just made it. You're now getting displacement and a change of market structure. We couldn't make a new low. We've broken structure. We have a fair value gap. This would be your breaker on the dollar. You had an up move, down move, cleared out liquidity. You're getting displacement above it. It's violating and it's leaving a fair value gap behind. So potentially you get a dip back down into that, and then you run this stuff up into here. Called this 15-minute breaker yesterday. So price is probably going to hold that for the rest of the day. It did. Lucky guess. So this is now a breaker block, the way I understand them. Price and my breaker blocks are teal, I guess. I don't know. I like teal. Price has run lows. It's now broken that and violated this structure. We're making new highs. We would want to see price respect this breaker if it wants to go higher on the dollar. Same on the pound. This of a close below right here is now your 15-minute breaker. You would expect price to respect that and move lower. Now, this could just be a New York kill zone OTE setup where you are retracing. An OTE setup would be, if you're going to be bullish here, you would anticipate price reaching down into this area and maybe news pops you down into here that then sends the euro high or the pound higher. So OTE for London is down here. This breaker may be what pushes it down into that OTE, and then you could get a run higher. Just reading tape. If had a close and break of structure, we'll see if it respects this breaker block here. Just watch and wait. No orders, no trades. I'm not going to take a trade until after retail sales numbers come out and we see what kind of volatility that introduces. And then maybe we will look for something to participate in. Euro, same thing. We had a run up. This fair value gap is holding and holding price down. This is now your 15-minute breaker block right here. So you would expect price to come back up. Maybe with the news you get a reaction back up into these fair value gaps that then sends it lower. You're targeting some liquidity here and here. Plenty of room to get a 1 to 2 trade on our 10K account if price cooperates. Your OTE area for the London session, if New York is going to pull back before it makes a run higher, you would be looking for something down here. So we'll just have to monitor that whole situation. US30 moving? Nope. S&P? Yes. Nothing interesting happening here. Pound and euro are where we're getting our movement before the news comes in, and so we're just gonna watch and wait. Excuse me while I send a message to a coworker. All right, got that taken care of. And now we can just go back to watching. All right. Hey, we got a couple viewers. Welcome. Like and subscribe. Leave a message in the chat. Say hi. I'd love to know who you are. Because as we build up this channel, we're not going to have very many viewers until, I can show some receipts and pass the challenge, and then people will get interested. So that's just the nature of the way YouTube works and the algorithm works and the way traders work. Believe me, I know I'm not the end-all be-all of reading charts and analyzing. I do know my system inside and out, so I have extreme confidence in that. But there's no reason for anyone else to, and I don't know if this is super entertaining because I don't take a lot of trades. I'm not looking to take a lot of trades, and people who are, there are probably people out there that can take a lot of trades and be consistently profitable. The stats say otherwise. When you look at prop firm statistics, the traders that get the most payouts consistently and the highest dollar amount of payouts are traders who are taking about 10 trades a month. And those traders that are taking over 20 trades a month they're like in the 1 or 2% of the number of payouts that are given and the amounts that are paid out. And that just, I mean, I think that's a pretty good indication of exactly how professional traders actually operate. Like people who do this for a living and make a crap ton of money. They're not out there just taking 1 minute time frame trades 5, 6, 7 times a day, in and out, in and out, in and out. I've seen ICT do that on his live stream, and again, there are people that can do it. That dude's on another level. He's the GOAT, obviously. He can read price action on a 1 minute time frame, and he can call moves and participate in those, and he seems to be doing really well with that. But the majority of people cannot do that. Stick to the higher time frames. Wait for your A+ setups to show themselves. Know exactly what you're looking for, then execute your trade. You're gonna have a higher win rate, and you're gonna be more profitable long term. Do not just jump into the market. We're just sitting here waiting for some news to come out. We've got about 25 minutes until that news comes out. Retail sales, red folder news. We've had a break of structure. Price reached up, grabbed liquidity here on the pound dollar, just to review, and then has since created a breaker block as it's displaced below this low and violated the bullish structure it had created. We had a run on liquidity, and now we're displacing back inside this orange box is a 4-hour order block. And I'm expecting news to pop up into these fair value gaps and then drop us lower. And I might participate after the news is released and we get some volatility in. I don't want to participate before because you don't know. No one knows how the market is going to respond to news. Sometimes it can be good news and the market reacts bad. Sometimes it can be bad news and the market reacts good. Sometimes it's bad news and it's bad reaction. I mean, you just don't know. It's a complete gamble to try to anticipate the wild swings that we've seen red folder news give in this market environment, current market environment. All right. Continuing to see some displacement below that low. Break of structure, fair value gap. This is the 2022 ICT mentorship model right here. You see price make a run above highs, relative equal highs, grabbing liquidity. You see displacement. You see a break of structure. You see a fair value gap. You now have a breaker block inside, or you have a fair value gap inside of a breaker block. So as price continues to drop here, I would anticipate, I'm going to take this off. I would anticipate from here, since we didn't get a deeper run and it didn't hold consolidation, I would anticipate price when news hits an entry potentially like this, somewhere around 50% of that breaker near the top of that fair value gap. Your stop would be at the top of the body of the fair value gap above it. So you've got 14 pips and you're looking for a 1 to 2, and I do 1 to 2.2 because that actually covers spreads and commissions. That's what I would anticipate here. But I don't trade red folder news. That's my plan. I'm not going to place a limit order here. If price runs harder down with the news, you know, and then we get this pullback and I see it start to pull back after the news hits, then I could get in there after the news hits. Now, if the news hits and price runs aggressively just straight up and makes another dig into here, then I would wait for another break of structure to participate lower. So two things to consider as you're watching this trade play out is you do have the optimal trade entry retracement from the London session, which would be down here into this range, into these fair value gaps. This is where if New York is wanting to go higher, it would retrace down into some of this area, which is an OTE optimal trade entry. I don't use these solely as entries, but I do use them. I like to be aware of where they are as reversal points, potential reversal points if I'm trading against that position. So fair value gap here, this would be in a discount of the London session. So if price is going to want to go higher, you would want to see it reverse aggressively off of this area down here. This middle zone is kind of the Goldilocks zone. There's a big, nice fair value gap here. This is a BPR balanced price range. So you've got a fair value gap here on this side and a fair value gap where they overlap is inefficient price action. There's no wicks inside of here. So you could anticipate price wanting to come down here, which you can see if we get involved here, our TP is about where this reversal zone would be. So I feel like we would be safe if we can get involved here. I don't know that we can. All right, I'm gonna check. We've got about 15 minutes. I'm gonna check a couple of groups I'm in and just look and see what messages are flying around. Nothing happening in any of that stuff. Yep. Let's see, what account am I on here? Let me get over to my 10K account on the pound. I'm risky. $200. I'm going to get some stuff set up. So in case after the news hits, we want to get involved here. I'm going to get some stuff set up in anticipation of that. Let me move my mic over there while I'm doing that. Oops, wrong mouse. I've got two computer setups here, one for my stream and one for my trading. And we're going for 2.2. All right, so we'll wait and see. I've got some. I don't have anything set. There are no pending limit orders set. This is just in anticipation. I've got. If I need to act quickly, I can, and if I do, I will let you know what's going to happen there. So we've got about 12 minutes. See what the euro dollar is doing here. Same thing. Break of structure. Maybe we get a pop up on the news back into these fair value gaps, maybe all the way back up to that breaker. It doesn't have to come that far. But yeah, it looks like we're going to want to see New York continue this run lower. It's stalled out on this 15-minute order block here. Probably will sit there for the next 12 minutes, and then we get some kind of reaction with the news one way or the other. The indices are just waiting. They're not going to do anything. They've decided they're going to sit and do nothing. Meanwhile, the dollar, aggressive run higher up into this 15-minute order block. Maybe news gets you a pop back down into these fair value gaps. I don't think it's going to come all the way back down to this order block. I would be surprised if it does. I think you're going to get just a little thing, and then you're going to start seeing some dollar strength here to run up into the 102.750 area. So this is your target. Fridays, I believe that's Sunday night's high. So that's kind of what I would be targeting. Maybe you get there today or tomorrow, but I think the low of the week is in on dollar right now. If the news does not push it lower, this I think is the low of the week on the dollar. And this is the high of the week on the pound, and the high of the week on the euro I think is in place. Now, if news pushes it and violates it, then I would anticipate those runs up being the your runs lower, or your highs and lows of the week. We'll just have to wait and see if this retail news does indeed confirm these break of structures that we're seeing, or if they violate them. Pound is climbing back up into that breaker block, close to that first for value gap now. Euro has a lot of room. Euro is way weaker and has run a lot lower. Has a lot more room to grab up into than the pound. I favor the pound setup here. We'll watch and wait. Again, 9 minutes. Dollar's beginning to retrace a little bit. This could be the anticipation of the news coming out. It's going to drop back down. Could be that it just ran all of this before the news so that it can run higher when the news hits. This is why we're not in a position. This is why we have no orders set. This is just me anticipating what I would like to see happen with the news and the advent of the news. So I'm going to leave this OTE fib on here for now. Corey Moss left a message. Corey, I don't know if you're watching. I am trading today. But if I get a setup, I'm always looking at the charts. But yes, I don't know if you're still here, Corey. Cool. Welcome, man. Just me and you hanging out. I am anticipating taking a trade today. There is a setup occurring currently here on the 15-minute time frame on the pound dollar that I'm very interested in. So if the news, again, I'm not in a position and I have no orders set to get into a position. I will not take any positions, bare minimum, until the news comes out. Oh, cool. Glad you were here yesterday. Yeah, no trades yesterday, but did analysis that was fairly accurate overall. There were no good setups. Again, that's why I don't trade Mondays in general. There's just not much happening. It's usually the market digging out a range that it wants to manipulate on Tuesday or Wednesday and then distribute throughout Thursday and Friday, Wednesday, Thursday, Friday. So, but yeah, man, glad you're here. Seven more minutes. I'm not sure what the delay is on here. I'd be interested to know. Let's see. Let's see here. The clock on. Can I get that? So the delay, I don't know. What is it? About 10 seconds maybe? I selected ultra low latency when I do these streams, but I don't even actually know what that means. I mean, I know what latency is, but I don't know what the difference is between their ultra low latency and normal latency. So Corey, are you doing any challenges with prop firms right now? Let me know. Let's see, the dollar pulling back a little bit after this break of structure. We failed to make a lower low off of this low. Our inverted fair value gap that has acted as resistance and now has acted as support. Price is rejected off of it. We are back up into this 15-minute order block right here. And yeah, we're going to wait and see if we can get some confirmation of our analysis with this red folder news here in about 5 minutes. So again, I'm anticipating price to run up into here, into this breaker, into this fair value gap. I love fair value gaps inside of breaker blocks, man. I think they are the unicorn model in my A+ setups. You see a run of liquidity from relative equal highs. You see a break of structure with displacement below an order block. It violates, this would be an order block. So if this had held, you would treat this as a confirmation order block that price is going to go higher, but it has failed to respect bullish order flow. And so now we've had displacement below it and with a fair value gap behind it. So it's your 2022 ICT YouTube mentorship model right there. And maybe we can capitalize on it. It's unfortunate that we have red folder news. Otherwise, I would probably have a pending order set right now. But because of the red folder news, I do not trade red folder news. I just, I'm going to wait. In a 10K challenge with Smart Prop Trader. Yeah, so Smart Prop Trader is interesting. Their prices are fantastic, but I don't like their drawdown. The last time I looked, unless they've changed it, I think their drawdown, overall account drawdown is 6%, I think. So yeah, it's cheap and the price point is nice, but the conditions compared to other prop firms, for me, it's worth. And I think they're running a big 50% discount or something right now, so you can get a 10K challenge. What was it, for like 38 bucks? I mean, it's ridiculous. So for that matter alone, yeah, I mean, your return on investment, if you can pass a 10K and you spent $38, I mean, good God. I don't know what their max allocation is. I don't. The main reason I have kind of stayed away from Smart Prop Trader is because of that. It's just their drawdown is so stinking low. I just don't like it. So good luck to you. How far into the challenge are you? Have you taken any trades? Yeah, the 50% off. Yeah. There's probably a lot of people that took advantage of that. I mean, it's, again, the price point you can't beat, but you are not getting the best trading conditions out there with a 6% account drawdown. Now, it just means you've got to really lower your risk per trade on your challenge. So with mine, I have a I'm risking 2% per trade, and that means on the Smart Prop Trader, you only have, if you lost 3 trades in a row, you're done. Now, if you're taking A+ setups and you have a 50% win rate, whatever. But to me, if I had 6% drawdown that I was working with, I would just reduce my risk significantly to at least 1% per trade on the challenge. What are their, I'm not sure what their profit targets are. Is it 6% as well? Maybe it is. Maybe you don't have to go as high. But yeah, 8% is as low. Oh, it's 7.5%. Okay, so they've lowered that. It was 6% the last time I looked. 7.5, not bad. All right, here we go. We're about to hit our news. Getting some movement going on here on some last minute. We've got 15 seconds on my clock. Let's see what happens with the retail news that comes out. I do have my account ready to go over here on my MetaTrader. If I see what I like, we might execute. Okay, so we get news. We get our pop up right into that breaker and into that fair value gap. Price is running up higher. We've left a gap right here, a little volume imbalance gap. Price has reacted lower. Look at that. My word. Come on, baby. I did not take that trade, but I've been sitting here for the last 45 minutes telling you exactly what I thought was going to happen. Completely random, completely lucky. I would anticipate price is going to come down into this OTE at bare minimum. Euro did much the same, popped right back up. Where? To the breaker. Popped right back up into that fair value gap with that breaker and completely crapped the bed. It's going to run this sell side liquidity here. Dollar, same, right back to the breaker, and now it's about to violate that order block. So what would I be anticipating here now? I don't know. Maybe price could come back up to this breaker again. Corey, did you take that trade, man? I did not. What a beauty. What a beauty. Incredible. So now you've got this 15-minute order block right here. Didn't take it. Well, sorry, man. Price is running low. Filling in these fair value gaps down here. What was the news? I didn't even look and see. So previous 0.7, it was forecasted to be higher at 0.8, and it was half of what it was anticipated to be. So that's not good for the market. US30, not much action. NAS went up, went down. It's currently down. S&P flipped both ways. It's like, we don't know what we want to do. Euro, about to run those lows. Pound, reaching our anticipated profit target, reaching into that fair value gap, almost reached the OTE level. I don't know that I would trade this order block right here. It is an order block. I almost would kind of rather see price come back up into this fair value gap again and into this breaker one more time. Drop down to the 5-minute. Yeah, I mean, I don't know. Where do I want to get involved from this point? If we're anticipating bullish price action for the rest of the day, if we believe that the high of the week was put in, then yeah, again, I think I would still rather see price dip back up. I would probably want to see something like this, and I would expand my stop loss, and that would mean I would need to bring my TP down to like right here. So this is kind of what I would like to see if I'm going to get into a trade on the pound. Is there something on the euro that looks better? Not really. Not really. Pound. Let me go back. Oops. All right. This was my original. I'm just going to take a screenshot of this because for the tweeters. Yeah, I would like to see a pullback here before I would get involved. Man, it's unfortunate. That was Red Folder News. What a setup. That is what an A+ setup looks like. That is how you take high probability trades. You sit around and you wait, and then you strike when you're ready. Red Folder News kept me from being able to strike, but I did lay that out for you live. I mean, very minimal drawdown, tapped right in, 50% of that breaker, filled in that fair value gap, and we're dropping hard. And the dollar is running aggressively. First buy side liquidity here for the dollar is sitting right here at the yesterday afternoon's high. So, you know, does it just grab liquidity there and then start consolidating again? Could, but I think we're going to either today or tomorrow try to make a run up here into that 102.750 area. What'd the gold do? Ran this sell side liquidity down here. Did it get down here? No, it didn't. Left those relative equal lows in place there. So popped up, came down. It's just consolidating, pulling back in. US30. I mean, it's done pretty much nothing. A whole big fat nothing. So maybe at the 9:30 open, you're going to get some more movement on the indices, but currently they're just very choppy and flat. There's no good setup in there. There's nothing that I would want to put my capital at risk for. I know Corey said you're trying to be a US30 trader. I do trade the US30 when it has good setups. And man, I wish you would have been here on Friday, because we caught this whole move on Friday, man. It was beautiful. But there'll be more. It's like I say, man, the market is like the ocean. There are waves forming all the time. And, man, there will be another big wave coming. But right now, it's just disgusting. What'd you say caught yesterday's move down? So right here, this area. Right there. That's a good run. I was waiting for it to take an old higher low before I was looking to get involved. I did see it pull all the way back up into this order block, and thought about it, but I did not. I wanted to see it take an old higher low first. I wanted to see it. It's still inside Friday's range, and now it's inside Monday's range, and it's just, there's nothing there, man. And that's part of the being a professional trader, is it's not there, you don't take it. All right, we're getting a little pullback here, so maybe we're gonna get some kind of an entry. You see it tapped right into this OTE of the London overnight session. This is where we anticipated price being rejected. So maybe we'll get an opportunity to go back down. Euro, aggressive move down, aggressive move up. It's not particularly inviting to go short here when you have news that sends it lower and then sends it immediately higher. So not really liking that. Dollar is, again, grab liquidity, filled in some of this. It's respecting this 15-minute order block. So we will wait and see. We'll wait and see. Is the OTE going to push this thing back up higher and try to get into some of this range that I had anticipated overnight? I thought the news, the pound news overnight that got this move down and then back up, I was anticipating that news to give this an opposite swing. I was anticipating it come up here. I had limit orders set up here on a 100K account with a different prop firm, and that would have been a beautiful like wick in and then anticipated down, but it never got there. So waiting for this 15-minute candle to close, and then I'm going to decide what I want to do, if I'm going to take a position. If we're just going to wait and see. Still waiting. that first move, that was the move to get in. That breaker candle with the fair value gap. Such a great setup. But price has now aggressively pulled back. We are filled in this fair value gap from a breaker structure in the 5-minute time frame. I want to see this fair value gap right here. I want to see it get one more respect. So we'll watch and wait. Couple minutes until this 15-minute candle closes. I might go until the top of the hour. It's probably all I'll stream today. I will keep watching the charts if I don't get into a trade between now and the next 15 minutes. Kind of ugly. If you look at those 1-hour candles, it's quite the rejection. All right, about a minute left here. I don't know. I kind of like a retest of this breaker. I think I'm going to set a limit order here at the bottom of the body of the breaker. And I'm going to have my stop at the top of the candle of the fair value gap above it. So this is going to be this is what it's going to look like. And I will put in the exact numbers in just a minute. So that's what I'm looking for. And we are going to come on. Okay. Man, that took forever when I clicked set the limit. It took forever for the MT5 to put it in. All right, so let me put this in. I have put in a limit order. And my entry is 2.5. 2.21. My stop is 2.5395. And my 2.4838. My TP is here. So there we go. Limit order is set. This is going to require price to retrace up into that breaker into that fair value gap again one more time. And then we will be targeting these fair value gaps down here. It does not have to take out this sell side liquidity for us to be correct. But that's what I'm looking at. The order is in, the order is placed. We'll see if we get triggered. It may not come back down, and that's fine if we miss it. Again, we're swimming in the ocean, and there's going to be many more waves. There is no time limit for this challenge. Does Smart Prop Trader, Corey, does Smart Prop Trader have a time limit? Do they have a 30-day? You know, you have to do it. So you have to do the 7.5% in 30 days, or have they removed their time limits? I can't remember. It seems like most of the prop firms out there right now are removing their time limits. But don't know. So the prop firms that there's actually 100 days for the first phase and 50 for the second. Well, that's basically no time limit. That's basically no time limit. For all intents and purposes, for real live trading, 100 days. 50, why couldn't they just keep it 100? Why could they just not? I mean, if you're going to say 100 days, just say no time limit. My gosh. That's not horrible. And that they've lowered it to 7.5%. I mean, maybe it's worth going and spending $40 and stacking another 10K account there. 7.5%. It's basically I would just lower my risk probably to like 1% on the challenges. Shooting for. Do you have a set risk reward that you go for, Corey, on yours, or are you just trying to milk out the biggest move that you can, or what's your strategy there? How do you manage what your system tell you to do? Yeah, you can see price filling in that big wick now, and this is what I was afraid of. I really wanted price to come back up and test that breaker block and that fair value gap one more time, and it still may. When the hour turns over, we may get a wick up, and because you have your open, high, low, close, so maybe the open high for the next hour candle is open, high, retest, and then we get the drop off. I would really hate to see this thing run away on us. When I say hate, it's not like I'm actually getting emotional about that. It's just unfortunate. I mean, when your analysis is right, you wait. This is what big game hunting is all about. You're going to see a big buck, and you're just not going to get the shot that you want, and so you let the big buck walk away. You don't just start shooting wildly into the forest to try to take him down. So we're not going to chase this trade. It did exactly what we thought. I actually feel really good about this whole situation. Even though I'm not profiting on this trade right now, this very second, I feel great that I followed my plan. I followed my strategy. I knew exactly what an A+ setup looks like. I did not trade the red folder news because that goes against my trading plan. And the trade played out exactly as anticipated. And that just is reinforcing the confidence that as a professional trader, you know what you're doing, that you can trust your system, you can trust your analysis, and that you can execute, and you're going to be fine in the end. So, yeah, risk 1%, that's good. Smart. Yeah, with 7.5% drawdown, 1%'s the way to go, man. Losing 7 trades in a row. I mean, I don't know you, and I don't know what kind of trader you are. I don't know what your system is, but any system that is going to lose 7 trades in a row probably needs to go back and get tweaked and refined to get a better win rate. I mean, it's not impossible to have a 7 trade losing streak. People do it all the time. I'm just saying it's unlikely you're going to lose 7 trades in a row if you are taking A+ setups. I'm going to stay here until the top of the hour, see if we get a push up at the top of the hour. If not, I'm going to leave that limit order there. in place. And it's invalidated. If it closes, if it just runs down and closes and hits my profit target, if it hits right here, I'll set an alert right here. Right now. Sorry about that. I'm gonna set an alert right there. If it comes down and just smashes that profit target, then I will cancel that order and that trade, and maybe be able to identify something else to get involved with, but I don't know that it's going to. The OTE here for New York, it really is a beautiful OTE. If I was bullish and expecting price to run higher, that would have been a beautiful entry as well, but I'm not. I only have that up there right now for my own personal reference of, hey, price could reject and stall out here, so be cautious. I would have moved to break even. Let's see, this is well, my original profit target was down just below that, I think. I need to go look at that screenshot on my Twitter. 24932. That's where my original profit target was before I moved it, which was right there. So we definitely would have been at break even already, because that was almost within just a pip or two of hitting our take profit altogether. So if I had taken that original trade, we would be at break even and would not have hit our full top profit target yet. But I have a new limit order set. I'm not expecting price to make a higher high. I believe this is the high of the week for the pound. I just want to get a retest of that breaker and that fair value gap to then eventually send us lower. If it runs down here first, I'll cancel that order and try to identify another good A+ setup in there that we can get involved in the move down. Hopefully we can find one. Don't know. Dollar is still very bullish. Rejected off of that breaker and it's moving higher. For the pound to get triggered, my pound order to get triggered, we will need to see the dollar pull back again into that fair value gap here again, possibly, or at least, yeah, something. So maybe as this new hourly candle opens, we'll get our the open high, and then we'll get our low and close, and we can grab some profit. Oh. About 4 minutes for this candle to close. Five-minute time frame. Just looking at structure. Again, would like to see it come back up into these fair value gaps and into our breaker. One more time. Because this setup is still valid. You would want to see price move to external liquidity off of that breaker. If we got a 15-minute body close above that breaker, but it didn't hit my stop, I would consider closing that position, as that breaker would be violated with a close above, a 15-minute candle close above this 15-minute breaker. I would probably not let price run to my full stop. If it didn't stop me out on the move up, if it just, but if I get a close above that, I would probably cut my losses, and that would be invalidated prices not respecting the bearish order flow any longer. That's your signal to get out. So price is running back up here last 3 minutes. So could be good for our open high low close here scenario that I've drawn out, where we get hourly open, we run up, get tagged in, and then hopefully we start running these lows again, make a new low. Corey, if you're still there, do you watch any other live streams? Who else you check out and hang out with on the YouTubes? There's some good ones out there. For US30 specifically, I don't know. There are several guys, of course ICT when he streams, but he's basically trading the NAS or the S&P. ES is what he does not trade the futures, trades actual contracts. But he's great. If you're familiar with ICT, follow along with him. The US30, I'm trying to think specifically who does US30 that I would recommend. Yeah, I mean ICT's he's the author of all of these concepts. I'm not trying to teach people how to trade ICT. That's not my goal. My goal is to show people how you can take a 10K account and grow it to max allocation. I use ICT concepts, and people will learn some of his concepts if they watch me, but I'm not here actually trying to teach order blocks and breaker blocks and fair value gaps. Like, you can go watch all of his stuff. His 2022 mentorship is fantastic. It's really all you need. It's all I basically use is I don't use NWOGs. I don't trade OTEs as entries. I don't I just use what I have found to work from ICT's concepts. There's just so much there. It's like drinking from a flipping fire hose of information. Like, you can't incorporate it all. You're going to be jumping around from one idea that he has to another, and you're not going to find true consistency. It's too much. Stick with the 22 ICT YouTube mentorship. It's a liquidity grab, a change of structure. I mean, what we saw here happen right now. This is the 2022 ICT mentorship. This is exactly it. Now you can tell me I'm wrong, but I don't think it is. I think it's exactly what he would say you should be looking for. You have a run above old highs. You have displacement and a break and a change of market structure that leaves behind a fair value gap. You enter as price retraces into the fair value gap with your stop above. I mean, you could be way more aggressive than we were, and you target bare minimum 50% of the move and target a fair value gap of 50% of the move, bare minimum. It did exactly that. I'm waiting for a retest of that fair value gap and then let it run lower. You can see price is not aggressively wanting to move higher. This is why I still favor price to the downside here. I favor price coming up, retesting that breaker one more time, stepping into that fair value gap, and then falling away. That is my anticipation. You can see the pound coming back down. I need it to come down back below into this level here for this new out of the candle. All right. I'm going to give it, I don't know, maybe 5-10 more minutes here. Hey, we're getting some movement up now. It's coming back into the bottom of that breaker block. You can see on the screen where my entry is at 25221. This would also be considered a money market sell model on the 5-minute time frame. Ran up, displacement, fair value gap. You're going to target these lows on a money market sell model. This is one of ICT's concepts as well. Again, I do not use it to identify entries or profit targets. I'm aware of it. I'm aware of pretty much all of his concepts. I've gone through all of his material. But I have simplified my setups, my A+ setups, to order blocks, breaker blocks, fair value gaps. That's all you need. You don't need anything else. All right. Would really like to see this 5-minute candle push up and trigger me in before heading for new lows down here. Just gonna go ahead and extend. We'll just take this out to the end of the day here, around 14. I don't like to be in positions past around 2 o'clock, so we'll just really after about 1:30, 2 o'clock in the Forex market, things you don't typically get a lot of movement there. So we want to see between now and 1 o'clock over the next 4 hours, we want to see this play out. Let's go look at US30. Man, there's nothing happening there, bro. Nothing happening on US30. It's unfortunate. I do have a live account with the funded trader. 300K live account on the funded trader. Still working to my first payout there. It was in drawdown for the first 3 weeks I've had it, and currently back to break even, or right at break even. So trying to get that into profit and reach a payout there on a 300K account. I have a 100K challenge going with them as well. I have a 10K challenge going with BESPOKE funding, and The funded trader was running a sell on their 10K, and I picked up one of those as well. So I really want to focus on taking a small buy-in account, getting funded, and then using profits to become max allocated. As far as I know, it's never been done. If it has been done, I don't know about it. No one's posted about it as far as I can tell, and no one has documented the process. So kind of shooting to be the first. Maybe I'll start a trend of 10K to max allocation. Your return on investment on a $100 buy-in for a 10K challenge, if you can reach, for Bespoke, $2 million funding. I mean, it just doesn't make any sense. I don't know why anybody's not doing that. If you have all the time in the world and you're not rushing and you take your time, you can do this. Anybody can do this. Yeah, man. I mean, come on. I'll be here every day, Monday through Friday, working on doing just that, documenting the whole process. If you know anybody else that would enjoy this, man, feel free to share. Follow on Twitter. Pump it up. Hype it up. Gas me up. I'm not going to be on when I'm probably going to be off of here in the next couple minutes, so I won't be able to watch US30 or S&P or NAS as the markets open. But I would anticipate bearish price action. And if that's the case, I would want to see maybe a Judas swing, which means a false move up, take out maybe this high or that high, and then look for a fair value gap or order block to enter off of and try to run out last week's lows at the bare minimum. That's kind of what I would anticipate there, but who knows what's actually going to happen? No one. Man, it looks like I'm not going to be able to get my my entry. It did come up and it didn't give a full retest of that breaker. It did come back up into it. And we're just going to let that play out. So, all right. I think I'm going to wrap it there and go on about my day. So, good luck to you for the rest of the day. Only take those A+ setups, and I'll be back tomorrow. I'll follow along on Twitter and let you know how this trade plays out, if it gets triggered or not, or canceled. But yeah, follow along on Twitter. If not, see you all